Excellent. Very good morning, everyone. I'm Charles from the dYdX Foundation. Very excited to be organizing and joining you this morning with this April 2026 Analyst Call. As every week, we have a special, as every month, we have a special guest joining us. So I will introduce him in a few seconds. But before that, I will go through the content and the kind of topics we will touch on during this call. We'll start with a market backdrop, just summarizing a little bit what has been happening in the past weeks around the markets. Looking at the macro drivers, obviously this market is definitely driven by a very heavy business news lines and macro overall. We look at the dYdX protocol metrics, a little bit the kind of different KPIs and ways we measure the activity on the protocol itself. The guest this month is James Hallam. James Hallam is a friend of dYdX. He was with the foundation some months back and is now leading BD for xStocks. We're going to deep dive into equity tokenization and all this market. So very excited to have you back, James, for a few minutes here. Looking forward to this conversation. And then we'll close with recent strategic initiatives where Winnie will look at all the different past and upcoming various ecosystem news, promotions and various news. So let's get started. When it comes to the market backdrop, the crypto market are essentially recovering from a sustained extreme fear regimes. You remember maybe a few weeks back when we were around 8 in terms of sentiment. So this kind of recovery of the sentiment helped Bitcoin to reclaim 70K around mid-April, and after holding for some time a 67K support. So lately, Bitcoin has been trading between 73 to 78K, which is a very good news for the market. As you know, Bitcoin is very much leading the charge to the overall crypto asset class. As of April 20, Bitcoin was at about 75K. So it's an increase of 6% week over week and 6.5% month over month. So overall, definitely a trend which is kind of encouraging and very welcome from the trader side of the community. On the Ethereum side, Ethereum has also been recovering slowly between 2.2K to 2.4K range. When we coming back to Bitcoin, we've seen some people commenting on the market that this might be a bottom of the bear market. Too early to call it a bull market again, but a lot of different metrics. Should it be the weekly average, the monthly average, or the 21 weeks average? I've been signaling that the bottom has been in, and there is some early bullish signs. So it's obviously too early, but we start to see a little bit on the order books, people having more bullish views on the market. That was for Bitcoin. So Bitcoin remains the dominant asset within our crypto market cap. Total crypto market cap about $2.6 trillion. And Bitcoin represents about 57%. So we see the capital being allocated and concentrated around this perceived safer crypto exposure within the crypto asset class. Coming back to the crypto fear and greed index, we are definitely in a better shape as of April 20, with about 55 on the index of crypto fear and greed index, which brings us to a kind of a neutral stand. And that's a meaningful improvement. If you remember again, as of early April, we were in the lows 8, which has been definitely an improvement, and it's just very, very much encouraging. On the next slide, we'll touch on the macro drivers. So, as you know, the Fed has held the rate steady as of March 18. The next meeting from the Fed is in April between 28 and 29, and the futures market are essentially pricing the probability that the rates will be will be hold again for the third consecutive time. So we should wait for this meeting to happen, but most probably some kind of stable decisions on that side. Inflation has reaccelerated in March. The headline is definitely the CPI at 3.3%, and the Iran conflict is evolving every week. We just finished a 2 weeks ceasefire. We don't exactly know how this fire will evolve. There is consecutive meetings with decision makers from the Iran and US side happening, but a very much a kind of situation which is evolving days by days. But the market seems to be much more comfortable handling this uncertainty and probably a little bit on the bullish side right now. The WTI crude has crashed 17% down to $93 on the ceasefire. It's still very much moving, but it definitely shows, as I mentioned earlier, that the market is kind of handling the price of oil, the inflation in a much more orderly manner, if we can say so, than it was at the beginning of the conflict with Iran. And Bitcoin has surged to 72K. Lately. So this brings us to the regulatory and policy update. The big headline, obviously, is Kevin Warsh, Trump Fed chair nominee, which has been going yesterday on April 21st, going through a hearing with the Senate Banking Committee. Warsh as well has been disclosing his personal investment portfolio, which is more than $100 million, and with quite some crypto exposure. Over 30 crypto projects are part of its investment portfolio, and including some indirect stake in dYdX, Solana, Optimism, Polymarket, and as well as Polychain. So this brings us to the SEC, another core body of the US regulatory family. The SEC Division of Trading and Markets has issued a non-objection guidance clarifying when non-custodial front-end and self-custodial wallets do not need to register as a broker-dealer. And that's a big news, even though it's not a concrete and firm change of regulation. It's definitely change and give a little bit some kind of guidance and probably a direction for where and how the SEC sees essentially non-custodial wallets or front-ends, and giving a little bit of an early clarity on the need for them or not to register as a broker-dealer. So that was one part of the regulatory kind of risk, which was very much unclear. Again, it's not a change of regulation, but it's a clarification of the views of the SEC, which is very, very encouraging. Something we will keep watching in the coming weeks is the CFTC perpetual futures framework. The chairman selling March commitment was on a 30 days rollout, which will essentially put an initial regulated US perp listing imminent within the US market, which is obviously something we will keep a close eye on. So dYdX has been built for this evolving environment where the crypto native boundary evolve and get closer to the TradFi infrastructure, and essentially creating this new and upgraded capital market and crypto market environment. So within dYdX, equity perpetuals are trading 24/7. It's a trend which dYdX has been early on and is building on. And today's guest is essentially one of the most active player in this global market and uprising market of tokenized stocks. So I'm very excited to kick off with the guest section of this analyst call. But before that, we'll go with the April protocol overview. So on the numbers of this April protocol overviews, we will look at the different numbers on the next slide for the dYdX protocol. So the lifetime volume at dYdX is $1.54 trillion. More than $65 million of protocol fees have been distributed to stakers, with more than 100 listed market today. You will see from time to time governance vote where the community essentially cleans up this order book and this listed market where markets are essentially lost a little bit of attention from traders, but overall a very wide choice of market to trade for the users of dYdX protocol. We're getting closer week by week to the 100K mark for dYdX token holders, 98,000 token holders of dYdX. And if those dYdX token holders have decided to stake more than $49 million of staking rewards have been distributed. And they are out of the 98K dYdX token holders, 33,000 token holders are active dYdX stakers. So that's a great also metrics for us to measure the involvement and the participation of the token holders within the ecosystem of dYdX. If we double click on the volume for March and April, the 30 days dYdX volume has been increasing to 11.7 billion according to DeFi Llama on April 21st. That's a meaningful rebound from February 5 billion base, and it's kind of tracking the broader sentiment regime change overall within our industry. More context on the sector, the perps on DEX's monthly volume was at a 9-month low in March at 699 billion, down from the October peak of $1.3 trillion. As April 4th printed the first sub $10 billion single day perps, which hasn't been happening since September 2025. So the sector remains under real pressure, but definitely we see the trend of kind of growing numbers of perps volumes growing with the overall kind of market recovery. So derivative open interest overall has been remained compressed. So the market is still evolving. In terms of dYdX staking activity, more than 230 million dYdX are staked as per April 20. So it's a visible step up since March 6, where we've seen a push up from about 200 million floor and back to 220 million. And this has been definitely an encouraging sign. About 5 million of dYdX have been unstaked. So overall, a stable staking activity within the dYdX chain and ecosystem, and a minimal exit pressure in this base. In terms of number of active stakers, also very stable, very loyal base of dYdX stakers with more than 33,000 active stakers as per April 20. Effectively a very small change, if noticeable, from the previous months. So we start the guest segment with James Hallam. James, very welcome back to the dYdX ecosystem. I know you're a forever friend of ours, and we are very excited to have you join. You were previously within the business development teams of dYdX, and you moved to xStocks. So maybe you can unmute yourself and take a few seconds for introducing yourself, explaining what keeps you busy, what xStocks is all about, and how you see this new market. And I'll follow up with a few questions.
Awesome. Yeah, thanks, Charles. Thanks, Winnie, for having me back. So yeah, back in 2021, at the end of 2021, I joined the dYdX Foundation on the business side, and sort of merged to the protocol team in 2023, 2024. And so I've been around the dYdX ecosystem for 4 and a bit years, worked under Charles for a long time, and had a really good time at the foundation. Now I'm working on a product called xStocks, which is part of, I guess, the Paywood brand, which is inclusive of Kraken, xStocks, NinjaTrader, and all these other entities. And ultimately what xStocks is one-to-one kind of economic representations of US equities and ETFs. How it structurally works is, let's say you wanted to buy one Tesla or one Tesla X. On the back end, the issuer, which is backed, would buy one Tesla on the market, custody it with Alpaca, and give you this kind of tokenized economic representation of Tesla. And so, yeah, I mean, xStocks has been around now for around 5 years. But fundamentally, over the last kind of 9, 12 months is where we've seen real growth in this sector, as you can see through equity perps, spot tokenized equities, which a lot of players are trying to get into the market, into the space. And yeah, I mean, it's an interesting time. It's definitely an interesting product. We're seeing a lot of adoption both on the retail and institutional side, and it's a pretty exciting place to be.
Thanks for that, James. Before we jump into those questions, in terms of geographies, can you give us a little bit some insights of which part of the world are essentially grabbing those tokenized stocks first? It's very interesting to see that for the most part, these are US stocks. And I'm curious to get from you some insight on which part of the world are kind of craving for these tokenized stocks.
Sure, yeah, I think it's typically regions that historically haven't had access to these types of products, right? You can't, in Brazil or South America, buy US equities on their kind of local market. And so we're seeing kind of that on the retail side. Asia is a huge market for us, same as Europe. I think honestly it follows very much so the kind of like perpification type users as well. We see a lot of whale trader volume and users from France, Germany, Netherlands, as you do kind of in perps where mature markets are. Same in Asia, in China, Japan, etc., where locally regulation and kind of jurisdictionally, it's very challenging to buy anything on a tokenized side because they're classed as securities and whatnot. And so, yeah, I mean, you're seeing kind of the traditional, I guess, curve of more mature market users buy this up in size. But at the same time, you're seeing, users in Thailand or LATAM who are typically the long tail of users, but they're sizable in terms of the number, and they're all interested in taking part in some activities here, whether that's lending markets being fully composable, whether that's just holding on Kraken or wherever they have access to. Yeah, we're seeing interesting behaviors here for sure.
James, the tokenized stock market has gone from $20 million market cap late 2024 to over $1 billion market cap by March 2026. What has been driving this adoption curve? Is it the retail rediscovering equities wrapped on-chain? Is it a kind of an adoption curve driven by builders integrating these tokenized assets into DeFi infrastructures? Or is it also, and maybe institutions allocating exposure in complement or maybe kind of competing with the TradFi alternatives?
Yeah, I think it's a mix of all three. I think it's clearly a need and a want from the market for more sort of like legitimate assets. You're seeing the transition from meme coins. Now people are wanting more equity perps. They want exposure to the underlying price movement. They want the reliability that this is one-to-one backed, which can be queryable on chain. And essentially, yeah, it's driven a lot by retail. You can't buy, if you're in Brazil or LATAM, you can't buy this on your Charles Schwab account, as an example. And so, that's on one side. On the kind of wrapper side, yeah, maybe just to clarify. So this is just a wrapper equivalent. It's almost classified as like a debt instrument, similar to how kind of Europe classify ETFs in that sense. But you are seeing now, people wanting to build on top of xStocks, like they were doing with dYdX and the grants program. We're seeing a lot of appetite for builders to want to sort of build novel instruments on top of these tokenized equities. As an example, over the last week, had a team called APYX, which you might have seen in the market. I mean, they tokenize, over $50 million of Stretch or STRCX. And Stretch is kind of the dividend kind of from MicroStrategy, which is giving you 11%. People are wanting to loot these products. They want to build options on top of them. We're getting a lot of inbound of building novel instruments for these types of assets. And this is something that xStocks, I guess, does pretty well because you get the price exposure. You don't get the kind of underlying, I guess, governance rights than you would of a normal security, such as voting rights, etc. Some different tokenization platforms do offer that. But I think where we see the market going is this price exposure, mainly because you have obviously these two kind of redemption and issuance mechanisms. You have primary and secondary. We want to make sure that this is, users can access this anywhere, basically. And then finally is this institutional side. So you're seeing a lot of traditional institutions wanting to, potentially look at dipping their toes into this market, whether that's through, traditional market makers in the TradFi space, because, they have the upside of trading equities for a long period of time. They feel like they have, a competitive advantage, I guess you could say, compared to the sort of crypto native market makers, because they know how to hedge the underlying. It's a little bit more challenging than, say, BTC market making. And so we're seeing a lot of inbound from these players. And then similarly around, the NASDAQs, the BlackRocks, these bigger players in the world, they're wanting to say, hey, like, how do we tokenize our assets? How can we distribute these to everyone in the world rather than just the US market? I think we're seeing it kind of push more that way.
Excellent. Thank you for that, James. I'm just looking at the dYdX user interface here, and I can see that we have 3 different markets which are essentially pulling xStock pricing. So when users of dYdX wants to trade Tesla or Nasdaq tokenized ETF or silver with iShare Trust ETF, they can essentially pull and get essentially the pricing feed from xStock, which is very interesting to see how this kind of DeFi integration is working, and we're very excited to see this collaboration evolving in the coming months.
Awesome.
So when we look at this tokenized equity now across centralized venues, decentralized venues, and self-custody wallet, which version of the on-chain tokenized equity wins eventually? It's a lot of kind of fragmentation, and people might wonder where eventually this tokenized stocks will get the most traction. Where do you see this emerging market essentially setting home and growing from?
Yeah, I think on-chain kind of structurally wins on the kind of settlement side. It's available 24/7. You can use it as collateral across DeFi. It ultimately allows you to transfer capital across borders without this sort of brokerage friction. This kind of immediate settlement. You don't have to wait 7 days or close a position out, transfer it from one account to another. So I think that's a main value prop. I guess where the challenges lie today still is around kind of spread quality and depth and liquidity in general. It's very challenging to price on the weekends. Market makers have to take the risk. There is inherent challenges with trying to make deep and close spread markets during the weekend, especially on the spot side and perps too. And so I mean, where we are today specifically, we're aiming to be everywhere on the xStock side, and I guess most other products are too. I think what we view is in the future, institutions are going to come in, want to access assets that are reputationally everywhere. And so whether that's on Binance, whether that's on Kraken, whether that's on Bybit, where we are today, we view ourselves as the infrastructure layer for DeFi and tokenized equities in that sense. We're platform agnostic. We're part of Paywoods or Kraken's brand in the company, but ultimately we want Kraken to have a liquid venue. At the same time, if a user is eventually, in Korea and wants to trade on Upbit as an example, I mean, that's not happening today, but we obviously want to be there to be able to provide access for those users. And so that's definitely a priority for us. And I mean, I think over time, this problem is going to get easier and easier and easier. You've seen HIP-3 markets on Hyperliquid on the perp side, trade pretty deep. You've got $1 billion on oil flows. And so you're seeing kind of like clear pricing patterns from market makers and traders that people are pricing these assets off. And so over time, I do think these will get, more interest from institutions, pro retail whales, the more platforms that they're on. And I think ultimately, when the NASDAQs, the NYSEs, the ICEs of the world can start to come on chain, I think it's just going to be a healthier ecosystem.
Thank you for that, James. I just want to move on to another topic which was requested by the community. Tokenized stocks and equity perps are both on-chain expressions of equity exposure, but they serve a different trader's need. Spot exposure with the composability and the collateralization on one side, and the leverage price exposure with continuous funding on the other. Where does each side win, and where does each side eat its structural selling?
Yeah, it's a good question. I think for us right now, a main aim is to get xStocks spot assets on venues. I think like perps is obviously interesting. I think it gives you a lot of fees. Clearly, there's a lot of volume that comes that way. I think ultimately that's an asset that's in its honeymoon period. People are enjoying trading that. It's a lot of talk across venues, market makers, institutions, etc. And it's driving awareness for sure. I think for us, where spot is really important, we have kind of programmable corporate actions. As an example, a security gives out a dividend. This is reinvested back into the underlying, in the actual underlying, rather than US dollar equivalent. If there's a stock split, same happens. If there's a reverse stock split, the same happens again. And I think for us, you look at hyperliquids, HIP3 markets today, there's like 5 Teslas as an example on an equity perp. It's real challenging for users to find, which one do I want to trade? Obviously, they want the most liquid asset. But on the spot side, as an example, this is where for us is like a very interesting basis trade opportunity. And we think that will drive a lot of volume eventually. If you're holding SPY on spot, so you're long that, and you want to short the perp, you can do that. And you can eventually do that on every venue, we hope. And so we're doing a big push on the spot side to get our assets on different spot venues. Whether that's on Kraken, as I said, on every other exchange is kind of a key priority. And so, yeah, I mean, ultimately they serve 2 different purposes, but often there's a good crossover, I think, between, dYdX, hyperliquids, power users, polymarket users, spot asset holders of tokenized equities. And I think it's trying to, how do we attract that trifecta into, this underlying xStock is a real priority for us. And so that's where it kind of, I feel like at the moment, it hasn't really gone through a hockey stick growth phase on the spot side. It has on the perp side. And I think everyone's interested in supporting equity perps, and rightly so, whether it's equity commodities. But on the spot side, I think its heyday will come once I think the education and the liquidity comes on chain.
James, I want to double click on something. You were mentioning you're essentially in talks and already sometimes deployed with some of your competitors, some of Kraken competitors, bringing xStocks over there. I'm just wondering how those conversations are happening. Is the product of a competitor, Kraken, welcome in many venues? It's probably counterintuitive to think that sometimes you might compete on one business line and collaborate on some others. Do you want to give us a little bit more insight on how the industry essentially is happily competing, if I can say so?
Yeah, it's a good question. I think it's kind of twofold. I think one, yes, they are supportive of these underlying infrastructure play. And yes, it's kind of a Payward brand owned product. But I think, us and a competitor take up like 80+% of the market today. And I think until there are new incumbents, exchanges are wanting to build their own products. You see this all the time. OKX and ICE saw previous, this week came out on Coinbase and Bybit wanting to sort of produce something on chain together. But today they've been relatively open to it. I think economics is challenging, right? It's like, how do you scale these assets without being on these venues? I mean, I'm less convinced now that it's that important to be on these venues compared to, say, 2-3 years ago. And, just being on the exchanges like dYdX, Hyperliquid, Lighter, etc. is an interesting way to drive AUM if we can get on the spot side, more so than, say, potentially being on a centralized exchange. But there's a lot of receptiveness for them to offer it to their users. There's clearly a big demand from these assets, and exchanges are reaching out to us saying, hey, look, we want to integrate this infrastructure into our product. You clearly have a lot of users. We have over 100,000 holders of xStocks today. In AUM, we have, I think, over 360 million or so. A real focus for us is to drive that to $5 billion. And we view these exchange partners as important, counterparties to do that. And we have to think about, how do we share economics with them based on AUM? How can we make this, a collaborative effort to make it a win-win? But ultimately, these guys are equally in our favor. And a lot of them don't see this as, hey, like we're growing Kraken's pie. I do think, these exchanges generally are pretty open-minded and saying, look, we want to grow the pie of this industry and eventually build their own products. And so, yeah, it's a push and a pull. They equally don't want, I believe, kind of, too much volume to flow to these non-traditional centralized venues like dYdX, Hyperliquid on Hypercore's L1, Lighter, etc. So I think having access is clearly very important, and having the opportunity to buy these, especially on every venue, is key for them.
James, there is one question which I was really waiting to ask you. I think the US stocks tokenization is kind of in motion and is definitely happening. We start to hear some conversation where essentially trading venues will differentiate themselves with kind of more exotic tokenization. Should it be secondaries or maybe tokenizing stocks from, let's say, Hong Kong, Singapore, or Korea? How do you see this market evolving beyond the kind of staple that are the US equities?
Yeah, I think it's a demand that's there. I think you can see that on the perp side. You look at HIP3 markets, specifically on perps, and you see the demand for, Hong Kong markets or Korean markets or Japan markets there. I think that's just going to flow into spot. There's a lot of conversations happening behind the scenes for us specifically, and I know a lot of other tokenized equity providers are having the same conversations with the US around, when can US users access this? I think it's coming, and I don't think it's going to be too long away, hopefully. US is clearly kind of the deepest underlying market, but it has the highest issuance friction. And so once this kind of unlocks, I do think there'll be kind of floodgates open type vibe. But specifically in Asia, these are markets that want to be traded. Like we've had conversations with the big players, big asset issuers in Japan as an example, who are equally thinking about this. But at the same time, they're kind of worried and they think, look, 27, 28 is going to be the time where, maybe the regulators allow us to do tokenized equities. Can we start with privates first, as you mentioned? Can we start with real estate? Can we just start with, general purpose cash stuff? And so I think it's a good idea. I think for us specifically, we only do US equities today and ETFs. We're trying to think about how do we get into these markets, or how do we get into these markets early enough, whether it's through privates, whether it's through kind of tokenization as a service type offerings. Do we work with the big, asset managers, banks like Nomura, and help with tokenizing their ETFs? I mean, ultimately, we can do that permissionlessly, which is kind of a benefit for us, but would need to kind of change the infrastructure, build out the product, etc. And the reason I say that is, we're definitely thinking about this. There's a lot of push and pressure from these users to say, hey, we want to trade and hold these assets on chain. And obviously when users are requesting it, there's clearly demand, and we want to serve that demand. But regulation is challenging, and we can't offer xStocks today into every market. And so it may take some time, but clearly there's a lot of demand there.
Excellent. Thank you for that, James. Maybe we'll move to the last questions. Beyond 24/7 access to equity exposure and tokenized stocks, there is this new phenomena coming on, which is the equity collateral inside DeFi and the programmable corporate actions and composable equity primitive. Which of those use cases are actually getting tractions today, and which one are still aspirational?
Yeah, I think the programmable corporate actions is something that we offer, obviously, within our contracts, both on most chains. I wouldn't say that.
So just to double click on this means if I own a Tesla stock via xStock, and Tesla just get corporate actions for every holder, as a holder of the xStock, tokenized stock, I can essentially decide on how to vote for each of the stocks I own.
No, you don't get voting power with xStocks specifically. You only get the economic exposure. But let's say you were holding one Tesla and you had a zero point 0.1 of a Tesla dividend. In traditional markets, you get that in US dollars. Let's just call it. On this side, it gets bought back at market and then reinvested back into the underlying. And so your exposure would be 1.1 basically. And that's programmable. That's fully on chain. That's just like a very interesting mechanic where we give the dividends back to the users, obviously, because they're custodied one-to-one by our Alpaca on the brokerage side and the custodian side.
Excellent. Thank you for this precision. Yeah.
But I think it's an interesting use case. I think it's an important one. But I don't think the majority of people are buying these assets for that. I think today where we're seeing, most adoption, we've seen this recently with, Flowdesk as an example. Stepping into the curator space, they launched an SPYX AP Agora USD lending market on Morpho. They had $20 million in LP commits. Basically, they pretty much nearly kind of had full utilization of the market pretty quickly. And I think these kind of like strategies, working with Morpho, Euler, Aave, a lot on the Solana side, Camino, etc., Deep Lend, they're having a lot of appetite for lending markets for these assets. And so we're trying to think, look, how do we speed run this? How do we give people who are wanting to borrow or supply these assets access? That's challenging, especially in the current market with lending. But I think it's something that's working pretty well on the xStock side. And so we're trying to keep on doubling down on that. As I said before, the kind of stretch X market, as an example, I think this is going to be a really interesting market for us over the next 3 months. I also view this as a one winner takes all market for this asset and some assets as well. Maybe not others, but as a stretch X market, like, if we've got $50 million in AUM and we're hopefully going to double this over time and we can have $100 million of that market and we can help put them in lending and we can loop things and, not us, but the kind of the holders of these assets. I think there's just really interesting mechanics that can drive AUM for us specifically. And so, yeah, I think that as a proof of concept is going to be pretty interesting. As you said, the basis trade on spot for xStocks is going to be really important for us. Deploying these assets on HIP1 as an example on Hyperliquid, trying to speak to other, DEXs specifically around, look, can we have spot? Can we have margin? Can they offer it through OTC within these exchanges? And just, conversations that are ongoing. But I'd see those types of, on-chain DeFi plays as the ones that are having most adoption for now.
Excellent. I hope you get some sleep after all this multiple conversation happening everywhere. Maybe the last question here, I think it's on everyone's mind, and it's always kind of a big question. Obviously, tokenized stocks offers 24/7 price discovery, but it also comes with a problem because the underlying equity essentially trades only during US market hours. So can you just explain us a little bit, like, how do you guys handle the weekends pricing, the overnight pricing, the early day, and how can essentially traders can expect to be priced on different stocks over this kind of non-trading hours?
Yeah, sure. Good question. So during trading hours, I guess it's pretty simple, right? It just follows the kind of underlying price on NYSE, on NASDAQ or whatever. After market hours, market makers do have to price this risk, I guess, and over the weekend specifically. When you do look at the markets on the spot side, you can see kind of spreads widen. I think that's just normal, right? They're unwilling to take some risk. It's more profitable for them, but they're still quoting these assets for us. And this is fundamentally the different part on, market making these assets. They have to hedge the underlying, but they can't because obviously, the market is closed during this time. And so they widen spreads to take the risk over the weekend. That's how it's priced today. And I think for us specifically, when you do look at the market, how we view this is xStocks, we really want them to be the kind of sentiment signal of price discovery over the weekend. And we want other assets and other issuers and other DEXs, etc., to follow us as the kind of underlying price movement on the weekends. And that's the real aim for us. You've seen this on HIP3 markets, you've seen this on xStock markets, is, when there's Friday close, typically events may happen on the weekend, the wars that are ongoing, etc., government captures, etc. You can see a clear price movement from, this news breaking on a Saturday to following kind of the spot perp prices on the weekend, and then opening on the Monday at the opening price. It's really interesting to see kind of this like smooth price curve, which I'm happy to share more data to you guys and the community if they want to see stuff like this. We're kind of launching something right now called xStocks Pro Insights, where we actually really track effectively how close the kind of spreads and price to the actual underlying market over the weekends. No TradFi brokerage obviously offers this on the weekends today, all price signaling. And so I think one interesting part here is, xStocks, other DeFi platforms are really trying to pave the way of price discovery that people can try and quote off of. And eventually we're going to do this with more and more assets. We have 130 live today. We want to get to 1,000 plus within the next quarter or two. And whether this is through liquidity on kind of spot order books, whether this is through kind of RFQ intent type liquidity, is something that we need to really think about on how we scale liquidity to 1,000 assets. But it's an interesting challenge. We're working closely with these institutional partners and market makers to ensure we have stable price feeds over the weekend, to obviously make the experience as best as possible for our users.
I love that, James. Many people are saying our market is missing some innovation lately, but I think the innovation is happening before our eyes. It just goes deeper into the backends, deeper into the stack, just solving problems which were not existent before this tokenized RWA, should they be stocks or anything else was happening. James, thank you so much for joining us today on this dYdX analyst call. Keep up the great work. We're super excited to have also some of the xStocks being quoted on the dYdX order books. And we'll talk to you very soon. Thank you again.
Thanks for having me, guys.
Winnie, it's time for the strategic initiative. Take it away.
Yeah, I'm sorry, by the way, there's drilling in the background, so just bear with me today. But yeah, so some strategic initiatives that we've been running at dYdX include the continuation of Surge Season 13. Surge is a community-approved governance program, and Season 13 went live in April. So for this season, you're going to get zero maker and taker fees on BTC and Bonk Perps markets all through April. And then we have the liquidation rebate program continuing. Liquidations happen, and the community just wants to essentially support the people who are trading on dYdX when there's volatility in the market. And so Season 13 pairs incentives with a new feature, which is trading sprints. So basically, the program is shifting from one large monthly competition to targeted weekly formats. And for April, the community themed it across commodities. So week 1 was a trading comp for gold, and then week 2 is a trading comp for crude oil, and then week 3 will be silver. And yeah, there's a $10,000 prize pool per event for the top 10 traders. Distribution per event is first place gets 3,000, second place gets 2,000, third gets 1,000, fourth to fifth gets 750, sixth to 10th get 500. And this is only for front-end traders, so not API traders, and only eligible for people who are trading using the bonk.trade user interface. And so rewards will be distributed by CLC. They are an active dYdX ecosystem contributor as well as a validator. And then this is another program that we were running from April 2nd through April 16th. So it is complete. This is just an update on some of the campaigns we've been running. So this was with VolTrade. Basically, people could trade ETH USD and Sol USD perps for a portion of 5,000 USDC and some VXP points. And yeah, it's a continuation of the program that dYdX was running with vol trade in March. But in March, we were only focusing on the Sol market. So April was an expansion from Sol to ETH and Sol. And then finally, there's a competition with Coiner between April 1st to April 30th. And yeah, Coiner is basically a copy trading platform that lets traders mirror the trades of top performing traders. And yeah, if you want to get involved, you can head on over to dydx.coiner.co, and you can select from an on-chain leaderboard and basically trade, and yeah, you can share in a prize pool of 10,000 USDC as well. That is all for comps in April. There will be other competitions in May, I believe. So yeah, just keep your eye out on the dYdX social media channels and on dYdX.trade, and you should be good to go to compete in the upcoming competitions. But yeah, that's all on my side, Charles, unless you have anything else.
Thank you so thank you so much, Winnie. There is always so much to cover within the strategic initiative, and you're doing a fantastic job at summarizing it for all the audience. James, Winnie, thank you so much for joining us today. Thank you for everyone joining as well live on YouTube and different platforms. We look forward to the next Sync with you. Until then, stay well.
Thank you. Bye-bye.